So I'm Catalin Kilofliski. I'm the CEO of Canagold Resources, and Canagold is a TSX listed company which is moving the highest grade undeveloped gold project in Western Canada through permitting and feasibility.
Catalin, welcome to London. Thanks for joining us.
Great to see you.
Well, yeah, you're here at the AMMM Conference, or was it Resource tomorrow? They change its name all the time.
Yeah.
How's it going over there?
It's good, and I think in a big way it's what it is expected.
Right.
I do not see a lot of optimism in the market yet. I think it's creeping up.
Yeah.
And it's always lagging. And then moving the gold price, which you've been witnessing, as a matter of fact, in the last 3 days, is starting to move in the right direction. And I think from a fundamental perspective, it will move. And it's always later that the sentiment comes back into the market.
Yeah.
But I'm not worried. I think it's a great conference.
Well, the politicians are doing a very good job of ruining the economy for you, so gold should do well. Now, let's talk about it. We've not met or spoken before.
Yes.
So tell me, what's your background? What have you done before?
Yeah. I have a business background, but I've been involved in mining for the last 20 plus years. I've been in various roles in some good success stories in the past, and hopefully now back at Canagold as CEO. I was the CEO of the company for about 4 years, from 14 to 19.
Yeah.
And then I'm back now, backed by a very large group, private group, who owns 43% of the company.
Yeah.
And not only it's a great group, but they've also provided a financing commitment to move the project through feasibility and permitting. So that's why I'm very excited.
Okay. Yeah. Well, yeah, you should be. And who's this group?
This group is called Sun Valley Investments. They have 2 active gold mines in Colombia. They're producing gold, really good margins there. 2 more mines coming online. There's a gold refining business, so it's a diversified group, and it's privately owned. It's great because, they effectively are banking us, and they really can put things in production.
Okay.
And really, that's why our project and our company is unique.
Okay, so AAA rated backing, we like
Yeah.
it. And with regards to what you're doing, you already made a big claim. You know, highest grade project in what, Canada, North
Western
America?
Canada.
Western Canada. Okay,
Yeah.
so that's a pretty big claim. So tell us what you've got today.
Yeah. So it's really about 1.1 measured and indicated ounces of gold at roughly about 11 grams per ton, which exactly, like I said, it puts us in one of the highest grade undeveloped projects in Western Canada. And we need that grade because the project is remote, and we need to be able to afford having a profitable project in that part of the world.
Right.
So it's a unique project. It's also one that I think it's got the right size to it, because we're targeting about 100,000 ounces of gold a year for, call it, 9 to 10 years production.
Cool.
And also there's significant upside. Everybody wants to talk about upside. We're actually not focusing on the upside, we're focusing on the real deal, which is the 1.9 million ounces of gold, and we're going to prove that we can make money from it, and I think we have a good chance of making real money from it. So always, the upside at the bottom of the mine as the mine grows, possibly in under 10 years maybe. But really, as I mentioned, we are in the middle of the permitting and feasibility of the project right now.
Okay, so the music to my ears. You're focused on making money.
Yes.
A lot of people forget to do this. Okay, so we got high grade. We've got the scale there going for you. What are the other variables which can drive the potential economics of this thing?
Yeah. So really, it's very simple. Grade is king, they say in the industry, right? And you need that. And luckily, we have that. And this is what really helps you make the money, right? So at the end of the day, how we're going to make money is having hopefully an all-in cost of producing gold, but targeting $1,000 to even $1,100 gold, right?
Sorry.
And in today's gold price of $2,000, you have a healthy margin to make money,
Right?
and this is what we are targeting. And is it achievable? I think it is. I think it's something that we're working towards, and this is kind of our benchmark that we're aiming to achieve.
Okay, so you mentioned something else that was quite important. Obviously, you want to make margin. You want to make money, right? Talking to various other CEOs that, over the last year who are moving into the production phase or are producers, saying there's a kind of new paradigm, cost structure paradigm at the moment.
Right.
We've seen what supply chain issues have done to inflation, which has done to, not just the cost of stuff, but the time it takes to get stuff to you. There's a new kind of base rate. It used to be, we're aiming for $1,000 or less. That's a good thing. I heard from a CEO the other day that new base seems to be around $1,400. He's telling me, right? So it's got harder out there.
Exactly.
Again, grade will help you, but I'm trying to look to what else do you know now about your economics as you move into this kind of feasibility study phase of yours?
We know a lot. Unfortunately, we can't disclose anything because we have not, and we are still in the middle of the feasibility study. But at this stage, we are probably more than 50% through the feasibility study. So we do know all the details and all the things you've highlighted. The real cost of doing things. And even with those in mind, we are still, confident, and it's our target to get to about 1,100. And you made a good point. Yes, it used to be the norm. You have to be 600-700 all-in sustaining costs. Look at Barrick. Look at those other guys. Their cost is much higher.
Yep.
So a project today, which can bring a new project to the market with the economics of 1,000, 1,100, it's a great project.
For sure.
Right? And is gold going to stay at 2,000? My belief is we've established a floor at 2,000, and eventually gets higher from there. So again, what used to be the norm many years is not anymore, and it's also a function of inflation, right? A big part of everything we're witnessing every day, inflation. Well, it's reflective in the mining costs, in all the things we're doing. This is why the costs are going to be what they're going to be, and this is why it's moved from 600-700 to, like you said, 1,400 in some cases, right?
Yeah. No, it's definitely so. I think there's a new paradigm out there. And look, our expectation is, economists' expectation is that gold starts really kind of motoring in 2024. Yeah. But that's out of our control.
Absolutely.
The things that are in control for you are kind of keeping the cost structures down and the way that the way that your strategies delivered, right?
Correct.
So can you tell us a little bit about that? Is it just that let's go as big as possible, as quickly as possible, or given the economic backdrop to this, do you high grade some of the assets of the project first? Do you build out smaller? I mean, how are you thinking about managing capital costs?
Yeah, so it's a very good point. And I think really the way I think our project is unique, it's a bite-sized project.
Great.
Right?
Okay.
Which is, what do I mean by that? It's really a project that, for example, we're targeting, again, a capital cost of around 200 million Canadian dollars, right? So it's a bite-sized project. In terms of high grading or not high grading, we are fortunate that the Orebody is very consistent, top to bottom, left to right. So we can always kind of mine, around 11 grams per ton. So we don't need to high grade, and we're able to use that average grade to make money. It's also an interesting point is that this project actually produced before in 1940s, 50s at the same grade, and they have, significant historical production. So you have that to validate your current grade. It's a very simple project, really. It's going to be an underground mine that goes down about 500 meters and processing about 1,000 tons a day. So relatively small operation per se. Yet, because of the grade, you can aim for about 100,000 ounces of gold a year. Right.
So, and tell me about the structure of the ore body itself, in the sense that, okay, it's 500 meters down, underground mining for sure. Is it, I mean, what widths are we talking about?
So look, it's a very consistent ore body. We don't have those, skinny veins and other projects. It's a very consistent, what you get on the top, you get all the way down. The average width varies from 1.5 meters to 20 meters.
You can get
so
after
it's
that.
various. So you various types of mining we are envisioning right now. We're trying to envision the lowest dilution possible. So maybe cut and fill is an option. Some long hole in certain areas. You want to, and again, what is exciting about it and the way we do it, we're looking at it from making money perspective, right? We want to actually build this project. Most juniors out there publish a feasibility, hope they sell the project, or there's a bunch of money on the backs of that. We're actually looking to make money and build a project that makes money, right? So why is it different? Because everything we do with engineers, we're challenging. We're running through our Sun Valley team, which has about 70 people in Colombia, engineers, geologists. So everything we do, we're bringing the reality check on it and challenging and improving in a way that eventually we can make money from the project, right?
Okay, you're trying to make it as efficient and as effective as possible,
Correct.
Which is as should be. But tell me, how do we go from where we are today, 30 million market cap, right?
Right.
In a very sort of challenging cash availability environment,
Right.
To 200 million market cap, the feasibility is going to have to do a lot of heavy lifting for you.
Yep.
Are you expecting to be able to improve the previous economic study numbers? Is that the aim here, or just validate?
No, I think really the way I look at it, for many reasons, all the historical stuff, and it's not only our case, in every case, you can almost throw it out of the door, right? Because, it's different environments, different assumptions, much lower level of engineering than today. PA is called PA for a reason, right? So the way I look at it, and the way I think people should look at it, in today's market, how is the project looking to be attractive to investors, to be able to put your money into it, right? And this is the reason why I mentioned, we want to be at $1,100 roughly all-in sustaining cost. When I have a bite-size, called 200 million capital cost, we want to get that to 100,000 ounces a year producer for 9 to 10 years, right? So if I can achieve those metrics, this is really what matters, because I think in that situation, project is financeable, it can move it forward. And this is what we are aiming for.
Okay.
Right?
So tell me how you structure that, because this is the I like having conversations with people who want to make money, right? That's a good conversation, not just drive up momentum. So let's say it is 200 million capex. You're going to have a 65% debt component to it. And then with the kind of equity or alternative financing element, are you happy to kind of give away have sort of expensive equity alternative financing at the beginning and then refinance at a point down the line, rather than dilute shareholders, with 30, 35, 40% equity raise? How do you do it these days?
Well, so it's two things. One, we have to get there, right? And again, through Sun Valley's owning 43% of our company, they provided financing commitment to get us to the decision point, right? So all the money required between now and completion of permitting feasibility have been secured through Sun Valley, right?
Well, as in, you've got the money today, or you have access to the capital today?
We have access to the capital, so we have the money today to do the work we have to do, and then the next after is will again be backstopped by them, right?
Okay.
And then company has actually not raised any money per se from the market in the last 18 months.
Okay.
Except through Sun Valley and their network and some of our existing shareholders who actually contributed.
And what was that deal like? Is that sort of debt for equity?
No, it's straight equity. With the largest financing that the company has done in December, which roughly about $9 million, was under a rights offering. To be fair to shareholders, right? Everybody got the right to participate. Actually, 2/3 of people participated. Success, how financing to that, we only done another one since Sun Valley and another partner or an affiliate or somebody in the circle invested money.
Right.
And then the next one we will be doing again will be similar type of arrangement. So we're not going to go out there in the brokerage world to dilute, and why not? So it's very tight capital structure from that perspective. Now Sun Valley, because they have the cash flow generating from their mines, in theory, they can finance the entire project. Okay. Right? They make
but there's no commitment yet.
There's no commitment for it. And I think, won't be probably what they want to do, because you don't want to put too many eggs in one basket anyway. It's a matter of investment principle, right? So we have that option. And this is the reason why, we want to have a project that's real and makes money. And I'm not worried, because, again, when we get a project to that type of economics, being a Canadian project, permitted, with this cost and targets I mentioned, there's a number of options you can finance. Even Canadian banks would be a good target for that, right? So how the biggest challenge is, to get your market cap up.
Well, there we go, because you talked about the capital structure being tight. That's a good thing, and it's also a bad thing in a way. Because what's liquidity like?
Liquidity, it's okay. We're trading anywhere between, 200,000-300,000 shares a day to very little a day, right? So, it's good liquidity. And again, the increase in market cap doesn't happen overnight. It's gradual. As you make progress, hopefully now the feasibility, then you get progress to permitting, and that's another milestone. Eventually you get, your market cap higher, so the dilution is less. But again, options like you mentioned about debt financing and things like that, they're all on the table.
Okay.
And, it's all about what makes most sense at the right time.
Right. There's a lot of noise out there. Gold companies have really been beaten up good in the last 2.5 years, 3 years actually. But there's a lot of you.
Yeah,
globally, like about 1,500 of you, right? So it's like it's all pretty much saying the same things, right? So very few people talk about making money; they just talk about surviving at the moment, it seems, and you're not being able to get access to capital or super dilutive, expensive capital,
right?
But not really an end product there, right? So how would you position yourself? How would you pitch yourself as, apart from what you said about grade and Canada and so forth? Why are you going to win where others will fail?
Well, it's very simple. I think we're almost privileged when you compare us with other juniors to be in a position where basically we don't need to worry where the next money are going to be coming from, right? Because the biggest challenge for junior companies, make plans. It's subject to financing, right? Subject to being able the market environment to raise the money and raise the capital. Well, we solved that problem with Sun Valley. They are, as long as we're focused on execution, right? So to get there to a production decision, basically we do not have that risk that everybody else in the junior space, that don't have a cornerstone investor that's willing to fund to get you to that point. And this is for that reason that the company is fundamentally changed from an explorer to a pre-production story. We don't even have a VP exploration anymore because we don't need one. Yet we've hired a senior vice president of mining because we need one. And then we may be hiring more people like that, right? So this is the change in the profile of the company that's happening right now. And as I mentioned, we are, I guess, privileged to be able to deliver on the objective. So that's really sets us apart. There's another element to it, through the backing we have from the largest investor, we will be becoming probably a bit more aggressive on M&A because, there are, out of the 1,500 companies you mentioned, there is a very small number that are still good.
I agree with you. There's a lot of stranded assets.
Exactly.
They can't get the cash and it's cheap.
Exactly.
Super cheap. Very nice.
And but small number, out of the 1,500, there's very few that actually are worth it. But
I could put a number down.
Yeah, exactly. But being in position we are now, as soon as the project advances through feasibility, we can turn our attention to maybe M&A and bring additional creative,
very aggressive.
Creative things to.
So, and do you think that's better than developing? You kind of got 4 other projects in your portfolio currently, but do you think that you're seeing better deals out there at the moment?
Yeah, look, really, we only have a big flagship project with Polaris. We have some non-core assets which are somewhat interesting. But like you mentioned, there are still some interesting projects out there where we can bring our capital and expertise and make a difference. And make a difference, meaning move them to a production or pre-production decision.
Get aggressive. I like it. Catalin, I appreciate you coming in.
Nice meeting you.
Spend time busy over there. I know, so you better get back to it.
Sounds good. Thank you so much.
Cheers.
Bye-bye.